Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. Bitcoin rejecting off of this high volume node and going to the downside, sweeping the longs off the table here, and we have a huge amount of liquidity grab down here, billions of dollars taken. So coming down to here, you have about, wait, I can't switch to max or what? Either way, we have a huge amount taken off the table here, and yeah, it was a large, I was hoping for the pump so I could get into the short, but congratulations if you did take that short up to the upside. Well, what were we talking about yesterday? Well, the noteworthy thing we were talking about here before we get into the liquidity was the 4-hour cloud. What do we mean by cloud? Well, we have to throw on our indicator here first and foremost. This 4-hour cloud, we were saying, watch how the 4-hour closes. Can we get above it with conviction? If not, you're likely going to the downside. I didn't like how this cloud came down to price action rather than price action came up to it. I was saying we would get one more stab up to the cloud. We got a stab rejection off the cloud, and that was all she wrote, and boom, to the downside. Coming to the pools below, 40,744, just below that's 40,689, and bounced off that on the Binance chart. On the CME, you were coming lower to come into this gap, perhaps at 39,395 to be exact. On each chart is different, so have multiple, the futures, this Coinbase, and Binance. All right, so we're back at the 0.65 of the diagonal pitch fan we've had price in for over a year. Let's go look at the liquidity on high block. What is high block? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are, so let's do it now. You have a large block up here, 100 Xers, 6K in Bitcoin up here for them to grab. Large pool over here as well. So it looks like they're V-shaping into the 100x perhaps, possibly rejecting off the range high here at 41,566. You have a imbalance of liquidity in that term. Let's go use the free resource here. So you can take this coinglass.com/liquidation data, and you can see who got liquidated at 1.29 million long in the last hour, 5.85 million in the last 4 hours, 69 million in the last 12, and 73 million in the last 24 hours for BTC. If you look at crypto bubbles, just to start, crypto bubbles, everything across the board is red. The one thing we were looking at, we were saying watch out for your alts on, was we were saying possibly coming on a C wave lower into this region, bearish on that level. So we were saying watch out for the alts. One thing we were looking at for total was, do we get a stab up to here? We got that rejection off of the cloud and came down into that BPR and more. So this cloud rejection off the stream was your clue, as we couldn't get above. This right here was your failure. Let's go ahead and take a look at the broader markets. I was laser focused on NASDAQ yesterday, so we were catching some plays on NASDAQ. We caught basically some of this upside play, and we're majority of longs. Here's our performance evaluation for yesterday. We had captured nearly 300 ticks off the market maker, 100% accuracy, and also we had passed another account. Here is the profit target being made on 150K account with quite a lot of firepower for Top Step. If you're considering futures, there is a link for the Apex right now is doing an 80% one-day pass thing till the end of the month. Only use risk capital, not financial advice. Please do not treat it like a gambling thing. Do take it seriously and make sure you have accuracy before you go all in. All right, and yeah, so if we go here, NQ broke a bunch of pointed controls. First had a reaction off of some bearish order block, came all the way back to the pointed control and rallied off that pointed control to the upside. Easier seen on the hourly. It came up, came back down, bounced, and now we're attempting to go for higher highs on the draw up at 17,165. The dollar rejecting off of this fair value gap zone. We came up to this, rejected off of it, and now we're double topping in a manner here. Let's go ahead and take a look once again at the liquidity for Bitcoin. So on the 7-day, we came down and cleared the 7-day pool, which makes us need to go to the higher time frame pools. Sorry, my high block is acting up, so we're going to use this. So going to the liquidation heat map, higher time frame pools, the 24-hour. You have 30 million up at that 42,292 region. Do we start to retrace into some of the liquidity? The V-shaped recovery could be up to a certain region. The ultimate draw, though, on the higher time frame is to the downside. Do we see that draw on the weekly? We got that draw taken on the weekly, and on the monthly we have some potential down below. Need to look at the 3-month to see that, and then you'll see all these billions down below. There's $1.6 billion at 40,213, which we have yet to come into. That is the gap down here, so I wouldn't be counting this to go up. In any event, for a long, you need a double bottom. So how do we do this? How do we come down for the second leg? So do we come down, double bottom, and then start to come up? These V-shaped plays, not my cup of tea. You could go into some 5-minute time frames and see that occurring here, where you have that double bottom confirmation, and you come up in even lower time frames. If you come into the 3-minute here and below, this is how we use our oscillator. So let's go ahead and throw that on. Link in the description for more for that. momentummaster.info. Scroll down to features, toggle everything at your leisure. You can see the schematic, you get those double bottoms. Fractal in nature, so it occurs on all time frames. So we'll go over how the trend cloud, baseline, stochastic array, and more coincide for some interesting sauce and what you need to see. So here, even if you were looking at double bottoms here last night and you hit the cloud and rejected, that would be key to show you that we're still going to the downside. The only time that changes is when we break through the cloud. And then when you start to get this cross up event of the baselines, then you break the cloud, you come back, you see the cloud shifting, and we always talk about this shift. So even on this small time frame, you can see the shift occur and possibly take it for a scalp. Not my cup of tea to bottom feed, but you look for those higher time frame confluence zones. So we basically came to a shallow point, but not buying it just yet. So do you come for a deep retrace and double bottom off of this zone? See a reaction off the 786 area. All right, so looking into the higher time frame, we're going to start with our 3-day reminder. Yesterday was the 3-day close. We talked about the 3-day closing bearish. Why did we think about that in that manner? We said watch out because we've been talking about it since this point here. December 15th, we had a cross down event. We talked about how this eventually leads to a 18% retrace. Even here it was cleaner, 18% retrace. So we came up, stop hunted, and now we are beneath that cross down event. The baseline suppressing the price in a nice manner. Closed the candle bearish. 3-day time frame suppression on the stochastic. Williams giving that heat to the downside on the 3-day. Coming to the daily money flow, RSI, stochastic, and getting to oversold levels. Williams as well. Could see the follow through for the suppression to the downside. We were talking about this tapering effect of the cloud here, showing this angle pointing from 2 to start to turn to 3 o'clock. Now that angle is sharper on the daily. Even if we do get a bounce here, it could be a bearish retest in the coming days. So even if we manage to, let's say, come down to here, bounce, and make our way back up, let's just say we get back up to here, the cloud would be doing something in this manner at that point now. So we could basically take this and change it because the angle would start to change on this daily time frame cloud. And so do we get a bearish retest of this and start to make our way down even harder for a bigger time frame head and shoulders event? Just something to think about on the horizon. Whoa. And that's the daily time frame. We talked about the 236 level needing to hold for any bullish narrative to continue. This was at 42,114. That did not hold. This bullish fib is negated, so we are deleting that. It is over. Time to look at the structure in a different light. So here we go. One light to look at under, one lens to refine your vision on would be to take this bearish trend-based fib, take this impulse to the downside, rise up to the impulse to the upside, the retrace, and we came below that 41.8 level, and we could be possibly going into these regions on the daily time frame. If you want to take it just to be frugal from that, you could be looking at it from this point, from the initial drop, but we're going to just do the full amount. All right, so that's the daily time frame for the bearish projection. Suppression of the stochastic, you're getting to oversold levels on the Williams. Coming to the 22. The 22 cloud and the 12-hour cloud was also curving in a manner here, which is why we were looking at that as a potential bearish overtone. We were saying constantly, I'm not interested in longing here, I'm interested in entering a short. I missed the opportunity up here, so I was hoping for a little bit more of a push up to get entry on. I did not get my fill, one hesitating, but no entry and staying on the sidelines is a play unto itself. You don't lose capital by being on the sidelines, so it's better safe than sorry in my book. But TA is at point as usual. Let's see. So also I was worried more about getting this passed for NQ. You can only have your focus diverted in so many directions at once. So is what it is. There's always another opportunity. So looking here, actually we're gonna refine this. This is a little bit too wide. So we're gonna bring it down to this first 12-hour one up to there. That's more accurate. So do you come down to this 706, 786 region, this confluence with the gaps here, possibly coming lower into these levels, coming to that 786 and bouncing would be where you would look for some confluence. Ultimately, you don't want to be buying into these red candles. You want to look for confirmation W's for the win, for support. So looking at the 12-hour and the 22, you have this curving cloud giving the insinuation of downside in advance. We were talking about, even if we get up to here, this could be a C wave down. We didn't expect it to be so shallow. That was the only error in our analysis. If we look at the 12-hour also taking off here, this is one of the instances where the RSI came down to the money flow. This happens when the strength does not step up to the plate in weakening terms. So coming to here, refining this on the 6-hour. 6-hour had the cross-up event, gave you that initial pump, started to fade the baselines, and now you're starting to get this overall cross-down narrative for some acceleration down to here, perhaps. We are fading on the adaptive as well. We came to the adaptive twice at the end of the year, bounced off it both times. Now we are closing candles beneath the adaptive. This is a narrative shift to eat some longs in a furious manner. The 6 stochastic is coming to the oversold regions, the Williams rising sun avoiding takeoff and coming even lower. MACD crossed down back here at 9 as this started to drop. You would have gotten that alert to your phone. On the 6-hour, 4-hour also had some bearish divergence. Where? Well, one thing you would have looked at here on the money flow, you would have seen we're double topping with money flow here, getting some lower high on the cloud. This was at 5 a.m. while we were making a higher high on the money flow, and then we started to meander around here. Money flow was not bringing the strength, not getting above the cloud. We talked about, can you get above the cloud? If you cannot, it is downside clandestine, and sure enough, clandestine downside. Okay, hourly. Hourly is getting to an oversold state. Money flow beneath the RSI, MACD in the Williams domain. Williams also oversold here. The fact that it came to that point of interest and bounced off it means our level analysis is pretty on point. So that's at least a good news here. The cloud did not serve you. This was around the London close. This would have been a key entry zone to watch trade with the cloud. We always say the cloud is on your side. It's opening up the floodgates and just letting that pour out to the downside, selling volume inbound. Let's go to the broader market. Let's see how the dominance rose up. So we have the dominance drop down to lower levels here and then bounce out from there. Still in this pocket region for the 0.6665 region of this impulse to the left. So this 50% level holding, tried to get a furious break in that, but as people get knocked into that USDT, we had that shallow retrace after the rocket ship takeoff, and we're heading into market rotation to USDT dominance going to the upside. We talked about on this 12-hour how this cloud is holding, and we were expecting a little bit more of a kiss to the cloud, but the bullishness of this, which is to say the bearishness of the market rotation, is to say here it held that 382 and just went higher. So this cloud was insinuating that USDT dominance, a downside play, was inbound. The Bitcoin dominance holding this region was letting the alts play ball, but ultimately the alts also had fatigue and were not holding the cloud. We had this curvature to the downside. This is why we saw the ABC here potentially occur. We also looked at SUI for my man Kluve. Let's see how SUI pooped the bed, because we were looking at that go to the target, boom, hit the target exactly at that 786. We were looking at it, where was that? Back here. So we were saying, yeah, if you come beneath this 236, you're likely coming to this 786 region. Boom, can't get more accurate than that. Right to that target, 786, boom. The math, doing the math stuff. Got the 3 pillars of liquidity, 3 pillars of trading: liquidity, math, and momentum. With those on your side, you can't be wrong. Look at how accurate that is. Down to that 786. You would think we did it after the fact. But we were talking about here in the Asian range. This was about where we streamed. We said watch for the fade. Up here, we're gonna probably come back beneath this 236 and bang. Hopefully you caught that short for sleeve. This was a 11% drop to the downside. Congrats on that. So anyway, where do we go from here? Who cares about the past? Let's look at the future going forward. So the total market cap banging its head up against this cloud on the 15, this bearish super trend still holding. We had a little bit of a sputter here in the London close and just dumped back down. Let's go see if there's any key levels that we can see nearby for the total. We failed off of that 12-hour cloud as well, this ABC to the downside. If we take the bearish trend-based fib levels, do it from here to here to here, we could be looking at a wick recovery zone down in here at the 1.508 trillion. So perhaps we come down to this region here and try to find some support in the 786, possibly coming down to this wick or the 786 and bouncing. As of this moment in time, you're holding the super trend, which was in place since the start of, towards the end of the year. You played around with it back here, but until that time it was holding since October on the 12-hour. You broke it down here, but eventually came back up. Are we going to hold this super trend that we're at on the total market cap? Looks like we could come down and sweep this level and recover this wick over here at the 1.508 trillion region, and possibly this wick over here at 1.482. Maybe wick down into that and come back. We'll see. That is for the total market cap. You had this previous nuke insinuating the fatigue across 7 time frames, getting that on the alts as well. This bullish trend-based fib served its purpose thus far. Do you hold the 706 level? The alts still holding the line here. The structure's kind of ugly, but looks like you're possibly double topping and coming to the 236 level. There's a wick down here at 450 billion. If dominance decides to rip here, you're getting a cross up event on Bitcoin dominance, so be careful of that on the 12-hour. That is confirmed, so you could be getting a dominance push up at least to that bearish super trend level. And if that's the case, then the alts will tumble a little bit further. You have the cross down event on the 12-hour for alts, so the alts might be having a bit of a problem. If the dominance increases and Bitcoin decreases, the alts will dump faster. Okay, so that means you can position into an alt that has yet to drop. How did ETH hold during all of this? I'm curious. ETH also retraced, but held more than it lost with that ETF repositioning, because the ETH BTC pair, people are switching over and holding their BTC in ETH with the ETF potential approval for ETH being next in line. So they're trying to sector rotate from BTC into ETH using their BTC to get more BTC, perhaps. And we were talking about these rockets down here as a potential double bottom for the ETH BTC. All right, so let's see, where can we go from here? What is on the chopping block? This is Friday, January 19th, Run for Profit Friday. So everyone's running for their profit in their shorts. They'll be cashing out. This is what they're cashing out into the late shorters on. These late shorters are getting gobbled up, possibly coming up to that 41,566 region. 41,566. We already recovered that wick, so we don't really need to have that there, but we'll keep it since it's in the immediate range. We'll remove this one, and 41,566. That's close enough. We'll just put a little arrow there because there is some liquidity here. Wait, what? So there's some liquidity to be grabbed on the short end of the situation up in here. Do we kind of bounce up to this region before coming lower? I'm not sold on the idea of a long just yet, and we could be squeezing some of the late shorters right now, coming up to here at least before coming down to that region. One thing to look out for if you are in a short is the baselines on the hourly holding. So if we start to close the hourly in a manner here with the baselines above, you'll start to get the cross up event and the potential of an hourly takeoff. You have the money flow beneath the RSI. Williams looking to have a crossover event as well. So perhaps you can have a little hourly bounce, dead cat bounce to some of the pools up above here. If we look at the liquidation levels on CoinGlass, we can see there is slightly more to the upside. There's 265 million up to that 42,371 region. Yes, there is some down below, but you'd have to go all the way further away to only get 150 million, whereas if you just go up a little bit, you get 250 million. So it goes where the most liquidity lies most of the time. You see here there's 41.5 across the exchange liquidation, so 132 million up here, so they might go up to 41.5 first, coming to this region, and then possibly going lower. All right, let's go see if you have anything here. I've been having issues with depositing from the UK bank rule. Started 12th January 2024. Been on the phone with the bank for over an hour. Yeah, I saw some message. If you want to get paid in crypto and you're having issues like that, there are a few of these firms. Like if you consider doing prop firm stuff, they can pay you in crypto too. So, you know, I think it is not tax free. Of course, you have to fill out your tax forms and they pay you with your license and registration and all that stuff. You have to verify. It's not under the table at all, but they basically, you can choose your payout method if you have trouble getting money onto exchanges or whatever. And I do understand the RICs before they let me use the bank to deposit. Madness. Got to pass checks to be able to use the bank to deposit, and they said I passed still blocked deposits and I have to call back tomorrow. Damn, that sucks. Yeah, I know they're trying to. I used peer-to-peer to get stuff on the exchange, like using other methods, payment services or whatever, but it's still, even that's kind of shady. Yo, what's up, Cluve? Yo, yo, yo. Yeah, that SUI was on point, wasn't it? Down to that 786. Pixel perfect. I like that Kimba guy. He's pretty cool. He actually shows receipts too. Not like this guy. I'll just leave it alone for now. Never mind. No thanks. So yeah, you got this thick cloud here. This thick cloud is basically here. Do you stab through and reject off the cloud? The cloud is mighty thick on the 15 here. So even if you get through and stab with a rejection wick, I would expect just like a filled balloon with air, you poke it and then it will deflate the balloon, but it still would get rejected through the cloud here if we burst on through and take that liquidity. This is an example of how the cross-up events work. You see this cross-up, and if you are so inclined, you can take that for whatever it's worth, and we'll use the baselines as your guide for your lines in the sand. And that is the scalper's tool, scalper's dream, using the baselines, one of the few leading moving average formulas you will find on the market. All right, so if we go to the 5 minute, 5 minute is, we already determined that it was a shallow bounce. So this is just the idea of a shallow 382 bounce up into that short liquidity and then possibly fading. I don't see this as a sustainable move to the upside, but I'm always open to be wrong. Just coming to this target and then possibly double bottoming. What it happens to do, how far down does it go? Asia is known for their fake pumps into London. We always talk about that. So we're looking for a little bit lower. Do we come down into this gap down below? You have some confluence regions over here with the bearish trend-based fibs. You can come down to complete this CME gap down here and even lower at the 30. This is actually not the CME, this is the wick, but coming to get that wick of the entirety of the longs. All right, so watch out if you're trying to bottom fish with the longs. We could be coming lower. You could look for a position for a scalp potential trading with the trend to the downside. You have this hourly cloud still showing no sign of abating. That's a very thick cloud. We could be doing something like this before we continue on down lower. All right, so this is just a liquidity grab to the upside to grab some of this short liquidity that late shorters, particularly the 100xers, and that is about it. I have to go ahead and get this account situated and head into work now, so I must bid you adieu here. Trade safe out there. It's Run for Profit Friday. You have some news, always be abreast to what's inbound. We have some red folder today. One last red folder, the retail sales for the German currency, and some orange folders for the Canadian currency. And we got a US dollar consumer sentiment red folder at midnight my time, which is around the silver bullet London close. So should have one interesting last day of the week, so trade safe out there. And that's my story, and I'm sticking to it. Looking to come up and reclaim some of this liquidity, late shorters, and then possibly come a little bit lower, an ABC continuation idea. That's my story, and I'm sticking to it. Thank you very much, and thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision,